Well, good morning. Quite an entrance. I usually only get that on Saturday morning, so on a Wednesday, that's great. Well, good morning. It's a pleasure to be here today, and on behalf of Invesco QQQ, I'd like to welcome you to today's program, The Future of Investing, Capitalizing on ETF's Growth. One fund that has been deeply ingrained with ETF growth over the past 20 years is Invesco QQQ. For those who don't know, Invesco QQQ is actually the 5th largest and 2nd most traded ETF in the U.S. And if there was a Mount Rushmore of ETFs, at over $70 billion and a track record dating back to 1999, QQQ would certainly be on the Mount Rushmore of ETFs. QQQ's underlying index, the NASDAQ 100, has been around since 1985, when NASDAQ created the index to create an index that followed the large cap growth index. The large cap growth space. At the same time, they created the NASDAQ 100 Financials, which is a large cap value index they created. And then given that QQQ does follow the NASDAQ 100, many investors assume that's a proxy for the technology market, when in fact, 40% of the fund is actually non-technology. And a lot of investors are surprised to learn that QQQ is not a pure technology play. Rather than thinking of QQQ as a technology fund, we at Invesco like to think of it as innovators disrupting their respective markets. QQQ underlying companies impact each of us on every single day. Who doesn't have one of these that they use once or twice a day? And in fact, some people even have 2. 15 years ago, iPhones weren't even on anyone's radar. And today, since then, Apple has sold over 1 billion iPhones. When we think about technology investing, it's clear that the lines are being blurred on what is technology and what is not considered technology. I think Amazon is probably the classic example of a non-technology company that utilizes technology to create competitive advantages. Tesla is another company that blurs the line between sectors. Is it a car company that utilizes technology, or is it a tech company that makes cars? And for investors, does that even matter? Later this month, actually, GICS is going to reclassify how they consider the different sectors, and technology will have a big impact on what is actually defined to be in the technology space. Funny enough, none of the FANG stocks will actually be considered information technology sector, and in fact, Amazon and Netflix never were in the sector. One thing is certain, though, all companies, whether technology or non-technology, need to utilize technology to create competitive advantages and not be disrupted by other players. One thing that stands out about a lot of the Invesco QQQ companies is that they do invest in the future to make sure that they are capitalizing on future opportunities as opposed to the opportunities that create their advantages today. When we look at, for example, R&D spending, we look at the R&D budgets of NASDAQ 100 companies and we compare it to the S&P 500, we've seen that R&D budgets are more than twice that on an average weighted basis, which shouldn't be too surprising considering the companies are larger. But we also look at what % of the revenues is being reinvested in the companies via R&D. We find that the NASDAQ 100 is about 9%. When you look at the S&P, it's closer to 4%. So these companies really understand that reinvesting into their companies today for future growth is what's going to make a difference 3, 4, 5 years down the line. And what are these companies doing today? So Apple, for example, is trying to turn their 1 billion devices into credit cards. Amazon is building brick and mortar stores. And Google, among others, is creating self-driving technology. In fact, Netflix is on track to spend $8 billion on content this year alone. And they just recently were nominated for 112 Emmys, getting the most nominations of any provider, which ended HBO's streak of 17 straight years of being the leader in that space. I think one last surprising feature of QQQ is how strong its track record has been. Morningstar has awarded it 5 stars for risk-adjusted performance over all time periods, and within the Lipper large cap growth space, it ranks as the top 1% of funds over the 10 and 15-year mark. So as a result, long-term investors have been quite happy with their investment, but short-term holders see benefits as well. With over $6 billion in notional value traded every single day, there's a healthy and robust market of buyers and sellers helping keep those spreads relatively tight for the ETF. So on behalf of Invesco QQQ, I'd like to welcome you all here today and appreciate coming and taking time out of our days to help learn and generate more ideas for how your portfolios can change going forward. So on behalf of Invesco QQQ, thanks for attending, and please enjoy today's program. Thanks.